Welcome to Accountants Law Pod, where accounting professionals and law firms converge. Hosted by Lynda Artesani, Sarah Prevost, and Steven Libhart.
Welcome back, everyone. How are you?
Good.
Good.
Stop laughing. Sorry, Steve.
We were picking on each other before we started the recording. I just have to have that.
Yeah.
Say that.
Yeah. Well, I know we talked, like, the weekend went pretty quick. I will say that I had my second shingles shot and I got through it okay. I did have some pretty.
Did you get like a fever?
Low grade. No, just some low grade, but it definitely impacted me. I was like, oh,
I didn't get any risk. I had nothing from that. And I usually get everything, no matter what shot. They say, here's the symptoms. I didn't get anything from this.
It wasn't very obvious. I mean, I just knew I was and my Oura ring was like, ooh, you are.
Something's wrong. When you get the storm clouds, it's like, oh, God.
Yeah, I'm like, oh my God, don't look at this app right now. But
you're not sleeping well. You're not this, you're not that. Something's not right in your body. No kidding.
The resilience thing is like.
Yeah, I've had that for a month now.
I get my second one in a couple of weeks, so I'll call you, Sarah.
Okay.
You're late on that, Steve. You're old. You should have had that.
Well, well, you're old too. Okay.
I had mine already.
No, so I had the original shingle shot, but apparently it wears off, and so the doctor said, "I want you to have the new." The
Seriously,
new
it wears off.
You should know this, Lynda. You're old.
I just had it though. I had it old. I didn't have it when I should have. I should have had it at Sarah's age, and I didn't. She told me not to. I kept asking because I heard about the benefits, like Alzheimer's and stuff. I was like, "Yeah, give me it." No, not yet.
Yeah.
I'll get it in 5 more years.
I have no idea how I segue to
segue to Clio QuickBooks.
I'd rather just talk about the shingle shot. Let's just do that for 20 minutes.
Okay, so it is like a shot. Clio and QuickBooks integration, real tips. Save you time. Boom. There, we got it out. No, I'm kidding.
There you got it.
I'm obviously, our firm and Lynda and I are a big proponent of the integration. We often meet firm owners that are like, well, we were told not to, or we don't, and blah, blah, blah. And I'm like,
usually the firm owner is told not to by another guy or girl in the courtroom that says, oh, don't do that. It makes a mess, which it can do. It can make a mess.
It can do. But you just really have to know what you're looking at. And to be fair, if you're a firm owner doing this by yourself, please don't do it by yourself.
Well, it's lack of knowledge, right? You just don't know how the integration works. So it's safer to leave it disconnected, and you don't have to worry about it. Because if you don't connect it right, which we know because we've seen it, people turn it on. They don't put any boundaries in place. They connect it. It pushes everything. You could have used Clio for 20 years. It's going to push 20 years worth of data in that you probably don't want in your QuickBooks. Yeah, you have to block it. You have to block it with a password.
Well, and you have to understand when you do that, what that does. It has so many little nuances to it. It's not a bad thing, but I'll speak to the benefit of it. There's a lot of benefit to it. One for which your revenue and so forth and all the data between the two programs is really key and integral. There's a lot of reasons why it's nice to have an app doesn't hold all of your data in one place. There's beauty to this integration.
Oh, that's a good point.
Well, honestly, Steve, I feel like even now with the whole AI forward focused of things, there are so many benefits to having a core product that you are attaching to, which is Clio has done really well over the years. And we see a lot of apps that way. We have it with QuickBooks, we have it with Xero, we have it with multiple ledgers. And all in one is great, and then it's restrictive. And there are component pieces to it that, depending on the type of firm you are, and depending on the rules and the guidance you need, it makes sense. I've just found that there's so many more opportunities to slice and dice data and look at it. So one of the main benefits is the revenue recognition.
Well, and understanding that. If you keep it not integrated, because you're pushing the invoices in. If you don't have that piece on, what we see people doing is they're putting the invoices, or they're not putting the invoices in, they're just bypassing the whole accounts receivable piece and just putting it in as income.
Yep.
And you're missing out on a lot of
key data. A lot of really, I mean, it's funny when we hear about, well, I don't want all the junk in. There's multiple reasons why people don't do it. And I'm like, well, okay, but then how do you know you're accurate? How do you know you're balanced? And to me, you don't, unless you're doing it just so. And there could be multiple reasons why, but then you're missing out on so much stuff. And then you're
So
missing out
here's
on
a Steve question.
Okay.
I have to jump in here.
Okay.
Because you know me, I'm Mr. Not Connect right now. So
he's very
when it's connected, when it integrates, and it's pulling in invoices into QuickBooks, okay? And that invoice is living there, and you apply a payment against it, you know, via the integration and all of that. Then the client might go back into Clio and change something. Does that come over in the audit trail then in QuickBooks so you can identify that they changed something after the fact?
Yeah, you can see. Yeah, of course, QuickBooks has an audit trail for it.
But you want to lock it down too because of that. You want to
You want to lock down your months when you close?
Yeah, because you're reconciling it, right? And if they change, we had someone change something in a prior year. And if you don't have that locked down, it's going to change it. And what you're going to find is you go to reconcile, like, why can't I get this to reconcile? Because somebody changed something in, 2025. You can't let them do that. And they can change it. It'll still change in Clio, but it's going to not push over because QuickBooks is going to put the barrier up.
Well, here's the thing. Here's another reason is duplicate entries. You can have stuff come in, get posted incorrectly, but not post it in the practice management software correctly in Clio, or vice versa, right? You could do it. And how do you know that? How do you follow that money if you have two non-integrated systems? It takes a lot more work to track.
The other thing too, Sarah, is Clio is the customer side. It's not the whole picture, right? So you're separating that customer side and taking it completely out of the accounting equation when you don't connect it. So you're replicating it and then you're doing redundant work. Why in 2026 do you want to do redundant work? Exactly. We're trying to go and do more automated things as we go forward. Like we're all about, let's do this or that because don't have to do it. So why not connect it? But I know the reasons are duplicate entries. You change something in Clio after you put an entry in. Now you got a secondary, let's just say they did something to the payment. Now it shoots another payment over because it's a one-way sync and you have to know what you're doing and you have to stay on top of that because what happens is it sits in the black hole of the payments to deposit or under deposited fund account if you're not paying attention. We've had plenty of files come by our way and I'm like, oh my God, what is all this in the undeposited fund account?
To be fair, it's because maybe it's a generalist accounting firm that you're working with. They don't have the specialty knowledge. It could be that you've never endeavored it. You don't understand it. There's a lot of reasons why there's so much fear around. To me, the benefit of integrating an app is to integrate an app, right? Like there's benefit to it. There's a fear around certain things. And when someone tells me it bloats the file, I understand that logic. But what are you gaining? What's the gain?
Plus, if you're in QuickBooks, that's what you're paying for. Bloat the file. I mean, come on. We're not in an age of working with some geriatric desktop product that's going to crash or something. You're working in 2026. You should be able to bloat the file. That's what advanced is for, allegedly. It's to be able to take in a lot of data. And we really haven't had a problem with big data inside of QuickBooks at all since they've shifted and changed things. We've had other problems.
You know what I like about to your point, Lynda, about the one-way sync. If they change something and an additional payment comes over, you can remove it then and not have it sync back, which is nice on the one-way sync, correct?
Yes.
You can fix some.
With lien law, if you do it, it's two-way.
It's two-way.
So it's going to correct the either side. It's not going to duplicate. With Clio, it's going to duplicate. But part of the job of manually taking care of the transactions and managing it is you're going to see that transaction like, and I always look at them like, if I'm doing the job, I remember that payment. Why is that here again? And then you find out that they did something. You go into Clio, they have an audit log, which they don't have in lien law. They have an audit log where you can see something that happened that was changed, and then look at why they changed it, and then you can figure out which one to remove.
Well, there's the beauty of also when trust is moving, you have basically what I consider it as is a clearing account. There's a lot of stickiness around our profession about how that works and why it should work this way and why it should be better. And I don't personally, all that aside, it's an integration. It's the way it is. Find a way to do. I consider it my clearing account, basically. It gives me the opportunity to control where ultimately the data is going to sit to align with what the intention was. And when you approach things in a certain way, I feel like if you have that level of understanding and you can give yourself that moment, I think it helps you in the end, ultimately. The benefit of not integrating, and I feel so passionate about this because I'm so amazed at the benefit of not integrating does not give me there isn't enough there to help me, given like you have Clio payments, timing of posting, you have payments that are posted in a certain way in one system or the other, or recognition of data. It's another way to add compliance and security to ultimately what you're trying to work to at the end of a month is, do I have everything reconciled the right way? Do I have the money in the right buckets? And I understand, Lynda brought this up. Are the funds in this trust account the right funds for that client? It could have been 2 years ago, somebody put it in wrong. And you're just now, time of settlement, realizing. And that might be why things have to change. Well, then you've got tips and tricks of like how to handle that, which is depending on putting on locks in the system, whether you put that in QuickBooks or whether you put that in Clio or combination of both, or how you work with the file. So there's like a whole subset of things that you can do to help maybe reclass things, maybe adjust things, make sure the journal entries are sitting in the right place. There's like a whole building block of things, right? But I think the ultimate goal is asking yourself, okay, what is the gain by not integrating this system? And I cannot find the gains. There's none to me.
And we've had this discussion over and over. There's some real diehard and do not connect Clio people in our group, which is good. It opens up the conversation about it.
Yeah.
But yeah, for us, I think it's just, we just connect it. And we actually have a client now that we can't connect. He doesn't want to connect it, wants to keep it separate. Fortunately, it's not big. So,
we'll connect a part of it, and that's the beauty of it too. So within the Clio QuickBooks integration, and on the even on the Xero side too, there are sections that you can turn on.
There's pieces, yeah.
There's pieces.
You don't have to turn the
That's
whole thing
beauty in that, and the whole point of that to me makes it so that there is some kind of control and understanding of what you're doing. But not everything integrated, Steve. I understand there might be some concerns or reasonings, or maybe the health of the ledger isn't there for you to support that change. You have to, in preparation for that, you need to prepare. Right now, Lynda and I were working with a client that it could depend, we want to turn the integration on. We will, but when I was looking at the health of the file, I'm like, no, hold on. We're going to stop for a minute. We're going to clean up the months that we need to get to. And then I'm going to show the team member who's working on it how we're going to turn it on and the deliberate intentions. And what does that mean? Because when you put a line in the sand in the software and say, I don't want anything before this date, there is some impact that's going to happen because there might be some invoices that may not come over ever, and a payment gets posted and you're only seeing one side of the equation.
Right, if you have open invoices.
The open invoice, or there might be a failure sync, and there might be a naming nomenclature. Oftentimes, just a pro tip here, there is a problem with there's only so many character limits that QuickBooks will allow come over.
Correct.
Like 13 or something, isn't it? Like
I think it's longer than that.
Longer
but
than 13.
Some case matters and some case names have to be so you can't just go back to the firm and say, I need you to shorten it. That's not, you have to know as a pro, you need to know how to work around that and advance into that skill set and put the right things in place for that. You have to know how to map things accurately and make sure that they're going in the right areas, in the right places. So there are some ways to save you time in the integration and ways for you to see within the programs what's missing. And like Lynda said, the audit log in both areas. Now, not every moment has a recordable piece, right? You have to know how to find the information in Clio, because sometimes it's at the matter level, sometimes it's at the firm level. So that's what I mean when I'm like, not
that
everything
always throws me off when it's a problem, and I'll be like, oh, what the heck is going on here, Sarah? And she goes, well, they booked it to the firm level instead of the matter level. She sees it right away because she works in it more than I do. And I'm like, I can't figure out why this is off. And she'll say that, or they'll transfer a matter to matter, and that throws a transaction that you have to zero out. That's
Mhm.
another thing that's part of the
Or you
integration.
use it to your benefit. I mean, imagine, I've seen this before. We have a client that has like a matter and then they have a submatter and then, and it kind of continues. Well, you can't necessarily, you see associated matters in Clio,
Mhm.
right? But you can't see it in the ledger way, the way that you would want to see it. But in QuickBooks, you can if you
Mhm.
build it just right. And then you take those entries that come over and you move them to your advantage because you would basically show, which is follows a bar compliance
Yep.
moment. You show how you moved money from one to the other. I had a client once years ago where totally they were related family members, but
Mhm.
totally different matters, completely not the same. And in writing, it was stated like I could move funds from one matter to the other on the ledger only because it was an approval and the email, all of the details went with it. Even though it was in the Clio side of it, I just copied it over and put it in the QuickBooks side so that I could, if at any moment I could pull those records and be able to follow why it went from a totally different name, totally different company to this other one. And it's because they granted those funds to be moved there. That happens. It happens with Guardian style stuff too.
Mhm.
So yeah, so I obviously I'm in a strong opinionated space. When am I
He's
ever not?
passionate, Sarah.
I'm
You're
very passionate on this
passionate.
thing about integrate it if you're in zero, integrate it with your QuickBooks. Um, and if you want to talk about why you don't, I'll understand. I may not agree, but that's okay. I feel
If you
like
want to talk about why you don't, you can come on the podcast and have a discussion with Sarah about it.
and we'll go back and forth on wins and odds of like there are some wins, yes, I agree.
Mhm.
But there's more benefit to it. So
Well, you know what's really cool about this whole conversation? We're working with a really powerful, wonderful software.
Yes,
yes,
You know?
for sure.
that's underutilized sometimes in firms. I'm
Yeah.
like,
A lot
there's
of
more you
times.
could do in Clio.
Yeah,
Yeah.
so
Uh,
true.
and there's more. We have a firm right now that we're working with. I'm so excited to see this, but we went through this efforts and there's some changes going on, and we want to bring over how revenue is. It's in Clio one way. We want to bring it over to QuickBooks and have the revenue separated by the originating or responsible, whatever it is, whoever's earning. And we'll have the accordion style QuickBooks file where we have it by class, by the earn.
Mhm.
And then we've come up with a metric on how we divvy up the underneath the operating by percentage. And sure, you can see it one way in Clio. That's great. But when you bring it over, that's the benefit of bringing over the data. Now you have it in the system. You find out maybe a paralegal accidentally put time in on their name instead of so those things start to show up. There's ways that you can see this data and then help yourself operate your business completely differently on how you divvy up those operating funds. If you want to do it by percentage or whatever it is that you want to do, simplify the method. And then you can start with real numbers, understand where revenue generation is and what expenses are attributed to that. That's exciting
Don't you
for this
think
firm.
too, do you think too, Sarah, with when you're doing an integration, if you've been the software and you're switching over to Clio, there's a lot that you need to know on how to do that next step. There's a lot of questions that need to be answered about how you want the data to be presented. Because
Yeah.
if you were already, or if you're already in Clio, you never connected it, and now you want to connect it, you really need to hire somebody who knows what they're doing and how the integration is going to play out. And if you don't want to pay somebody to do that, get a trial version of QuickBooks and connect it and see what happened before you go and do it in your own live file. Because you can't unring the bell, and you want to make sure that how the data comes across is the way you want it to be. You have to know how to put those settings in and connect them in Clio. You have to have a boatload of settings already in place in QuickBooks before you connect, because unlike Leanlo, where you can kind of set them up on the fly, Clio, you have to have the products, the services, all those things in place
Hmm.
prior to connecting. And I think some of those things, it's really something you want someone who knows that knows Clio to connect it, because
Yeah.
like I said, you can't undo it, and we've lived through that where somebody connected it and then it blew in a whole bunch of stuff, and now we're on the other side of it removing it. And you don't want to have to do that either. I mean, there are tools for that too, but if you can do it the right first time. And if you're using classes, you want to make sure the classes are set up properly. If you're connecting it, you want to make sure the AR is presented the way it was. You don't want it to be mispresented, so you want to make sure they align. So once you've connected, make sure that everything's aligning. Make sure the trust balances align. There's a lot of steps. Don't listen just to the salespeople at Clio. You want to make sure that you have it set up properly with a good expert that knows what they're doing. So you have a great integration where it just runs beautifully in the background.
Well, it goes to add to what you're saying. There's wonderful consultants and there's wonderful accounting firms that say, "Oh yeah, I understand," but they don't maybe have the depth.
They don't do the work.
The biggest thing is understanding how you work as a firm, how you work as an individual inside that firm. How do you record things? Because you might find some redundancies in the workflows. You might find some like reevaluation of stuff. And then how do you want it to come over? There's like a whole subsuite of conversations that happen. And a lot of times, I mean, it's no joke, you're modernizing even how you work in modern standards right now. Like you're working with modern equipment, right? And then how do you take it one step further? So to me, I'm a little bit passionate about it too. Is this weekend as I was, hanging out with some of my my friends and so forth, I was having a conversation with someone and I was asking all these questions and they were like, "Oh, yeah, you can do that." I'm like, "Yes, but you're not integrated."
Right? They don't know what they don't know.
They don't know what they don't know.
If you don't know all the things, because we see a lot of times people connect the software. Hey, we're guilty of it. We connect software and then we're not using it fully to the fullest extent.
Yeah.
If you find out what it does, because it might do a lot of things that you're maybe doing manually that can be done, automatically just because you connected the software.
Yeah. There was something else I was going to say that I think is really important, and Lynda and I run into this, but it's escaped me. So maybe it's for another call. But this is a good one.
Well, that was very interesting. Thank you for all of that.
Did I win you over?
Yeah.
Yeah.
Okay.
He's going to call you later to have him.
Yeah, she'll call me this afternoon.
I will.
If you enjoyed today's episode, please take a moment to like, share, and leave a quick review. It's the easiest way to help other accountants and attorneys find our little corner of the podcast world. And while you're at it, hit subscribe so you never miss an episode. Have a question or a topic you'd love us to cover? Drop us a line at info@accountantslawpod.com, send us a message through our website, accountantslawpod.com, or leave us a comment on any of our socials. Your idea might just make it into a future episode. Want to go beyond listening? Consider sponsoring an episode and get your company in front of our growing community of accounting and legal professionals who love learning, laughing, and leveling up. And as always, don't forget to join the conversation inside the Accountants Law Lab Mastermind group at accountantslawlab.com, where collaboration meets inspiration every week.
I remembered it. So Lynda and I have a big, strong feeling on this. Your Clio and your lien law and your practice management software is practice management software. It is not your accounting question software. Quit asking them how to do accounting work, because that's not how this works.
Good point.
That's what I remembered. I'm like, that's a really important one.
No, this is a good topic. It was a really good topic. So hopefully we help people.
Well, enjoy the rest of the week. Bye-bye.
Thanks, everybody.